Hi and welcome chart artists. Today I will be sharing the easiest trading strategy known to mankind. If you feel that you've missed out on this complete move here to the upside and you had to FOMO in, you got stopped out, perhaps you liquidated your account during this little pullbacks to the downside, I have the easiest trading strategy that you can apply by not FOMOing into trades, still applying amazing risk management and making significant profits with this momentum to the upside. Also, I am excited to share this with you. I've had a conversation with Bybit, and for my community only, we have agreed on an amazing offer. Go down in the description right now. Click on this link to benefit from this amazing offer. 20% discount on fees, also $30 on $100 by only trading $500 in volume. That is insane, especially for you, my community. Cool. Let's get into the simplest trading strategy known to mankind. Right, let's go into this price action and see what happened here. When I switch on the trades that I took during this momentum here to the upside, and I go and switch on my weekly levels, first thing you have to identify is momentum to the upside via a third Elliott wave or a C wave to the upside, where you have a long consolidation and finally you have the breakout. And the clue for me to enter or to use this strategy was when we smashed through this weekly level that we've been watching for long. And if you want to know more and you want to get the alpha first, you want to know when we are going to get momentum to the upside or when we are in a third wave or a C wave, please go down in the description and join our Legends community, where I drop the alpha every day together with Andy, where we do videos, educate the people, and also identify when we do have momentum waves to the upside or to the downside to apply this simple trading strategy. Right, okay. So for me to activate this strategy, and I don't always use it, especially not during a ranging market like we had over here. Also, a ranging market over here, I do not apply the strategy because then you can bleed out your account slowly but surely. But when you have impulses, like we had zooming into the price action over here, when you have impulses to the upside, this strategy works phenomenally well. It is about how to identify the impulses to the upside. And as I said, please go and join our Legends community, and perhaps I'll make another video in terms of educating people how to identify these impulses to the upside. Right, for now, the simplest strategy that I have been using for years when I identify momentum like this to the upside is to say that we had a weekly over here, and my trigger was when we smashed through this weekly like it did not even exist. Okay, it just broke through like a hot knife through butter. I applied this strategy to anticipating more momentum to the upside. Okay, cool. So let me zoom in here onto the 15 minutes and we go through some of these trades that I took, is to say that, okay, I sat on my hands and we had a fake out, we had a retest, and then we had another breakout, we had a retest, and everyone's like, no, perhaps we're going to break down, we're going to come test this weekly level. And I just sat on my hands and I waited to see what is going to happen. I do not FOMO into trades because I know by using the strategy, I can still make significant gains to the upside. And I then took my first trade here by the 8th of Feb. And let's zoom into this price action to see what did I do over here. Okay, cool. I'm here on the 15 minute, and we can even go down as low as the 10 minute or even 5 minute, depending on how aggressive the move is. Okay. Right, so let's start with the first trade I took. First trade I took, simple trend line. I'm tracking the momentum to the upside. We smashed through this weekly level, and now all I'm doing is using one line to track the momentum to the upside. And as soon as you start forming a trend, and it does take a little bit of experience to know where to put and how to put your trend lines, but let's go through it so I can show you how I've done this. First trade I took is, I had a little trend over here, consolidated, and then we broke through. And here I entered my trade, and the rule for this trade is you put your stop below the previous low and you're always targeting the high because you do not know how high this wave is going to go. Right, okay. And what I then do is, as soon as my stop loss triggers the high, I leave some of my position open. So as a rule of thumb, what you could do is you put your stop loss, you enter at the break of trend, you set your alarm on your trend line so that you don't miss the action. You need to be sniper about it. And then here I take 70% to 80% of my profit. Okay, but let's work on the rule of you take 70% of the profit and you leave some of the position open. Now your entry is still here. You've taken 70% of your profit, and any momentum to the upside, you are still benefiting because of that open position. Okay, so first trade was a 2.71 risk to reward ratio. For the experienced traders out there, you will know that this is phenomenal. The bigger and the higher the risk to reward ratio, the better. I typically do not take a risk to reward that is less than 2. Then I just stay out of the trade. Okay, unless I can manage my risk better, and I'll show you what I've done with some of the altcoins. Also, Rune and Solana, two of my favorite altcoins that I like to trade. I've applied this strategy a while back to those two altcoins as well, and we can go through that right now. You can then see second trade that I took was a 1.54, but what I did with this trade is the rule that I typically apply is to say that if my risk to reward is not worth it, but I can see we still have momentum to the upside, I will move my stop loss slightly higher, because one of the rules that I do apply here is to say that if you break, or when you break the trend, you do not want price action to come back into trend. So you can tighten up your stop loss quite significantly to still make the risk to reward worth the trade. I will not put my stop loss under this low because the risk to reward is not worth it. It always has to be 2 or more. So what I did is I moved up my stop loss around about this area, and I still benefited from the high. We took the high, I took 70% profit again, plus the 30% of the position that I left open here, which also meant that my entry price was lower because of the previous position I already had open. Okay, so what happens is when you have an entry over here, you take profit, you leave some of the position open. When you open the next trade, your entry, what happens with your entry is, let's do this, it moves up, but it doesn't go to exactly where you've opened the new trade because you have some of the position open in the previous trade, which then enables you to manage your risk better as well. Okay, then simple thing again, onto the third trade. I took profits here by the high. I again left 30% of the position open, but now the position is slightly bigger because of the profits I'm making along the way. Took 70% of the profit, left it open. Third trade I took, again, put my stop below the low, 2.45, risk to reward looks fine, took profits at the high. 3 successful trades without being stopped out once. Then again, 4th successful trade without being stopped out. And now my position is just growing and growing, and I'm taking profits as we move up. The worst thing you can do is just buy in and leave it, because there could be a nasty week that comes down, stops you out, and then you get liquidated and you burn a massive hole in your account. Okay, and so I just rode the train to the upside. Another trade I took, risk to reward here was amazing, 5.12, massive risk to reward, where I took profits here by the highs and then further momentum here to the upside, where we then started forming a bigger consolidation. Usually when I start seeing this, where the trend lines becomes much longer and you start having fake outs to the upside, that's where you can see that the trend is starting, or the momentum is starting to slow down. Okay, but nonetheless, I took the trade, stop below the lows. You can see risk to reward 4.83, took profits here at the highs. Right, another successful trade in the bag. Here again, long sloping trend. You can see now you're starting to get more fake outs, but nonetheless, I'm targeting the highs. I want to ride out the momentum until there's no more momentum. Okay, now what I'm spotting is that we're breaking down. We've lost this momentum here to the upside. Usually I am just keeping an eye on the top trend, and now because we're coming down, I'm just sitting on my hands. Okay, for now I'm sitting on my hands. I'm still waiting for us to break this trend at some point before I will consider another move to the upside, or this is now perhaps the end of the impulsive waves to the upside. Okay, so this is how I made significant gains on my portfolio on this momentum here to the upside without FOMOing into trades and being smart and responsible with my money. Okay, next up, Solana. I did exactly the same thing a while back on Solana already. I actually left my chart. All my scribble here, I didn't delete it and update it yet, but I was waiting for a bigger breakout from this trend. And then when we got the breakout, I started trading over here. It just shows you do not have to FOMO into trades. You can still be responsible about how your trading is. I don't know if it's going to be a fake out. It could fake out and then break out to the downside. So I sit in my hands and I wait and I say, hang on, there's some massive green volume kicking in over here. Right, let me apply my one-line strategy. Again, yeah, even on Solana, you can see I played the breakout, I targeted the high, stop below the lows. And so we moved up and I played every single trade to the upside. Here now we formed a much bigger consolidation. okay, giving you signals that the trend is slowing down and potentially you should stop using the one-line strategy, okay. And that's where I switched to swing failure patterns, point of controls, weekly and daily levels, and volume strategy. And so depending on what the market is offering me, I will change the trading strategy that I use to make gains, okay. It is estimated that markets trend for about 30% of the time and they consolidate for about 70% of the time. So this strategy will make you money 30% of the time, and that's where you have to learn other trading strategies to play consolidation ranges as well, so that you can trade 100% of the time. If you would like to know more about other trading strategies, as I've mentioned, go and join our Legends community, link down in the description, where myself and Andy drop daily alpha, educating everyone there to fish for themselves, not just providing signals, but video updates every single day where we teach people how to trade, what are the levels that we are looking at, and how to apply exceptional good risk management. Okay, let's jump into Rune. With Rune, I've done exactly the same thing. Here you can see I was anticipating a breakout. I don't have this trend in here, but basically this trend got the breakout, and then I'm like, okay, I want to see if it's real. I don't want to have a fake out here. And then I saw the green volume kicking in, and I was like, hang on, okay, cool, let's do it. Well, let's apply my trading strategy. Okay, what was interesting about Rune, and I just want to point this out, is to say, okay, I actually did play this breakout over here. I targeted the high and we went much higher. Okay, you are still benefiting from higher price action even if you're taking profits at the highs, because you're leaving 30% of your position open until you get stopped out. Okay, cool. I played this trade and we moved up. These two trades I did not play. And the reason I did not play these two trades is from a risk to reward perspective, okay, it didn't really make sense. The high was so low that if you look at the risk to reward and where you are supposed to put your stop loss, there wasn't a 2 to risk to reward for me. And even placing my stop loss underneath this low still didn't make quite sense. So I just decided to stay out of this trade and I didn't take the trade. But I could have still moved my stop loss closer to make the risk to reward worth it, because the theory that you are applying is to say that you do not want price to break back into the trend, which it did not. But if you did move your stop loss to break even, you would have been stopped out by these weeks over here. Okay, but nonetheless, I did not take these two trades because the risk to reward didn't make sense for me. Although I was tracking the momentum, I just left the 30% that I traded over here to ride the way up. And then here I took another one. You can see breakout, beautiful risk to reward, and finally beautiful risk to reward on the way up. Here was just a massive resistance area, and as you can see, we consolidated inside the resistance area. And here I played another trade, beautiful stop, high risk to reward. As you can see, I mean, I think this was a nice risk to reward trade. Targeting the high, you put your stop loss below the previous low, and I entered the break of trend. Nice 3.5 risk to reward. Okay, cool. And so we went up. I left, my position was quite big by the time we got over here, so I just left it to ride the wave up. And then here again, risk to reward, I was not going to put my stop loss over here. If I'm targeting the highs and I'm entering the breakout, the risk to reward cannot be 0.34. Again, what I then did is to say, okay, price action should not come back into trend, so I moved my stop loss over here so that the trade makes, the risk to reward makes it worth it. Okay, cool. And then I got stopped out. Yeah, I got stopped out of my position, and I was like, okay, I'm out of the trade now. I've made significant gains. I'm now going to wait. And exactly that's what happened. We started consolidating. Okay, and there is a couple of trends that you could have played the breakout, claiming the high. I didn't play this, but I then started tracking Rune from a bigger time frame perspective and then played this breakout here again. Okay, but that's basically the strategy. That is how simple it is. All you need is one trend line. You need to plan your trades using your risk management tool. Okay, enter a risk to reward not less than 2 to 1, and Bob's your uncle. There you go. You don't have to FOMO into trades. You're making significant gains. You're leaving some of the position open for higher momentum to come, so your entry always drags slower behind as having an entry that is exactly at the break of trend. Right, then also, if you'd like the best trading strategy as simple as this, if not even simpler for your long-term portfolio, go check out this video. Until the next time, cheers for now.